Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say in the islands, October 16th, 2015, and this is Trending Markets. We do have the U.S. equities markets up and away, continuing to rally off of yesterday's substantial move in which we saw a triple-digit move in the Dow Jones Industrial Average. A little bit less than that on this move up, but still significant, up about 75 points on the day. More importantly to me than the 75 points that it's up is the fact that when we look at these previous tops right in here, we can see that this market has absolutely traded at and slightly above that point. It's gotten me extremely bullish. Of course, we pulled profits earlier in the week in which we took a trade that we entered the market at around 1967. We got out of that trade just below 2,000, but this market, that in the S&P, but this market is well above 2,000 right now. We'll look at the S&P in a second, but nonetheless, we have a nice recovery in the market. As we can see, this market is absolutely going to finish on a strong note. Standard & Poor's 2026 up about 7 points on the day today. Tremendous rally in the markets, trading up about 0.75%. But what is really interesting to me is the way we saw this market trade as this market had a little bit of backfill. And this is what I'm talking about. We entered the trade roughly in this area this last week at around 68, roughly here. As the market came up, my sense was that if it was going to break 2,000, which is this mark right here, we could see some underlying weakness. We did in fact see that, and the market in fact traded down. But here's what's interesting. I've got two moving averages here. This blue moving average, of course, is our very long-term 200-day moving average. This red moving average line is a 50-day moving average. And what is significant to me is how it found absolute support at that particular level. If you take a look at the recent lows that we got in the market, this market did not have the ability to break below there, found substantial support. And the way that I look at it, you have a series of bottoms right in here, which are just above the point in which it has traded to. But my sense is that if we barrel through this particular point, we're going to have to take another stab at breaking above this particular 200-day or really long-term moving average. If we see that happen, my sense is we're going to make a play for these highs up at around 21.25, those being the recent tops in the Standard & Poor's 500 and the historical and record highs in the marketplace itself. Because when we compressed this chart, and I had it expanded so we could really take a look at the way this market genuinely bounced off of this point right in here, you can see these series of tops that we have right here at about 21.25. So traders, we are flat in this market. We pulled really good profits on this one trade. Let's see what happens come Monday, because I'm probably going to want to re-enter this market, and we're going to want to re-enter it from the long side unless something substantial changes over the weekend. We absolutely have some solid support that came into the market, 1875, that being an absolute bottom, I believe, or tentative bottom, I should say, but a bottom up till this point after witnessing that tremendous fall from grace that we saw really the end of August. And then the recuperation really began as we went in through September. We had this shooting star, which was significant mid-September, taking us down to what I believe will eventually look to be a double bottom in the market as this market trades to higher ground. So again, we pulled good profits on our trade this week. I am looking to re-enter this market from the long side, and my sense is that we'll probably initially go to take out the 200-day moving average. Traders, oil oil closed up nicely today, up roughly almost 2%, almost $1 per barrel, 47.27. But I'm not convinced that we have seen the kind of sell-off that we might see in the marketplace. Weekly chart, when we look at that, this week was absolutely a down week. That's this red candle here. We really believe that we have support currently at around 47. We also believe that we have resistance. Our former resistance was really at about 48. And that was really based upon a series of tops that we saw in the market right here. However, the move that we saw last week took us well above that point to 50, where it found resistance and then began to track lower. Even with this move up today, we are still tracking below that 48. And my question is, are we going to go back into this particular range, 44 to 48, or are we going to find some sort of support above that? My sense is we'll probably play back to the channel and have this marketplace move back down. I would venture to say we're going to see support at 44. And lastly, I want to take a look at the dollar, because the dollar has been so interesting. It's been under tremendous pressure. Take a look at this daily chart, for example, and you can see that the market hit these tops above 96. We've got them 96.62, but we absolutely saw some real resistance when we hit this top. So we know that the resistance is there, but we also have a really strong level of support. We can even take it back to this point back in February of 2015. Draw our line across. Let's give it a little bit of depth there. But when we do that, there's no doubt support just below it, support. You had this big spike down, but nonetheless, the bodies are right within there. And again here, and now again here. So are we going to see the dollar really begin to find some steam and move back up? We know that we have some support here at 94, historically speaking. We also know we have resistance at around 96, but we are now just off of this level of 94. So my real question is whether or not we're going to find some support come into the market. That's the bullish side of the fence. On the bearish side of the fence, and we talked about this a little bit earlier this week, but that is the fact that when we look at the long 200-day moving average compared to our 50-day moving average, we definitely got a death cross, a dead man's cross. It's called a couple of different things, but it's simply when the short-term 50-day moves under the longer-term 200-day moving average. Typically, when you see this kind of a cross, the other is the golden cross, and that occurred. Let's see if it fills in. Might take a little while for it to fill in, but we got our golden cross right up here, and that was absolutely significant because that signaled a huge move. End of what 2000, well, midpoint of 2014. You get that golden cross, and from there you're off and away to the races. So I'm not convinced as of yet that we're going to, on a long-term basis, see this dollar continue to rise. If this particular pattern is any indication of what will lie ahead, we could see, and this is of course much more long term, we could see some more weakness come into the dollar. But for right now, we have to convey the fact that we found some real support at around 94. This has been Gary Wagner, wishing you as always good trading, and we will talk to you on Monday for another Trending Markets. Bye-bye.